This to me has to be the best way I get in a trade during the Asian session. So a lot of traders don't tend to have the luxury time to trade because of their 9 to 5 work. So this can actually help you to catch a trade in the Asian session. The Asian session is usually in the morning from 6 to 8 or 9 o'clock. So at that time frame, you can get good entries and good trades that can sustain you for the rest of the days. So this is how I get in my Asian range trade, targeting Asian highs and Asian lows, or Asian lows and Asian highs for entries and targets. So first of all, on this chart, I could probably see how, yes, how price came for a sweep around this zone here. And after that, we had a run through to the downside, forming this break of structure. So basically, price is currently in a downtrend. We can see previous breaks of structure to the downside. And right here, we have this relative equal Asian range here. So I'm going to mark this as my Asian low liquidity. Another thing you want to put in handy is seeing this Asian high liquidity here. So we have this Asian high liquidity. So basically people buying around, selling around the zone here, their stop loss will be above. So this is my Asian high liquidity. So I always mark my liquidity with a dollar sign. What I want to see right here is for price normally go for liquidity. That's what drives the market. So wherever liquidity is resting is where price tends to go for. So right here, I can see we are currently in a bullish trend around this intraday um, or this sub swing structure here. We are in a bullish trend, right? Price is trying to come for either this liquidity here or this liquidity here. So whichever way place price is going to is where we want to start incorporating for buys or sales. So there are also we can also see this dynamic range here where price has retested here. This zone where price came to fill and we had this run through to the downside. But let's see what price will do. Okay, right here we can see this push up and rejection. Fine, that's what we want to see because this tells us that price has swept liquidity. But we don't just want to rush in and just get in a trade from there. What we want to wait for is to see if price will give us a confirmation. So in this case, I'm going to head to the final time frame, which is the 5 minutes time frame. So be sure of my trade, I want to see a bearish sweep around this zone here. I want to see a bearish sweep. I can easily get in a trade from here, but there is no dynamic zone or an order block to just mark out for a trade. So I'm not going to rush in this trade. Though this is what I want to see, a sweep to the high side and a reversal to come for the sell side liquidity. So let's see what the market would print from here. Okay, now good. This is what I want to see. A bearish sweep like so. A bearish sweep like this. Then the next thing I want to see is a break of structure to the downside. So I would want to see price break structure here to confirm that we are finally going to start selling and probably pull back then, just like so. Okay, on the 5 minutes time frame, I can see that price is driving to take out this low, but we can see this rejection. This will be safe for me to get in my trade from here to take the risk. I'm just going to getting my trade from here with an instant execution with whatever price was to do because if I should go lower, I could see that this would be a break of structure. On the 10 minutes time frame, I'm seeing this rejection, but 5 minutes time frame, it's also a rejection. So I'm just going to risk this trade from here and see what price will do. If I get a loss, that's fine. But I'm certain because I've seen an engulfing candle here. How price engulfed this candle here like this. How price engulfed this candle to the downside. So now we have this confirmation that price is going to continue pushing down because of broken this structure here. I can as well mark out this zone here and just probably get in from here. But I'm going to stick to my previous entry, and this would be my target. So my target will be the next imbalance because I'm anticipating price to come for this liquidity here. So I'm just going to target this next imbalance for my entry, for my take profit, sorry. So this would be a 1:4. I'm just going to find a way to make it a 1:5 because I like to, you know, make my trade a 1:5. So let me just stick to this zone here. But apparently, I like to just target imbalances. So let's see. Okay, this is 1:5.14. So if I'm risking $1,000, I'm looking forward to make $5,014. Let's see how this trade plays out. Plays out, sorry. Okay, we are going down nicely. You can see what I was talking about. If I had marked out this point here, I would have been able to get an entry as well. Then I want to see price before I break even. At this point, I want to start break even and start to break even my trade. But before I break even, I would want to see price break recent lows to confirm that yes, we are going to go lower. So the first low I want to see price break is this previous lower high and also this lower high. If I start to break even my trade, you could see that first we've taken this first lower high here, and that's a full confirmation to take out this lower high like this, and we're able to take out the second lower high. At this point, I can break even my trade, or I could leave it. Or another thing is that I can look for a re-entry from here because I'm so certain that price is coming for these guys here. So what I would do is, how do I get a re-entry? I don't want to go low. I want to stick to the 5 minutes time frame. I'm just going to measure my fib with my Fibonacci tool and mark out potential areas where price can start. So in this case, I'll be marking out my premium level and see if price would get there because sellers tend to sell their assets at a premium range. So that's why we always use the premium level for entries while selling. Then we use the discount level for entries while buying. So I'm still going to stick to the target, which is here. And this will be my, I would like to make my TP a little bit, my SO a little bit higher, like 7 pips. Okay, 7 pips. Okay, so this is a 1:3 trade. If I'm risking 1,000, I'm making 3,039. So that's basically $8,000, risking $2,000. So let's see how this trade plays out. Okay, we got tapped in precisely, and we now have a run through, breaking previous lower highs again. We are coming down to our target. And just like that, we were able to meet up with our target. So 2:8, that's 2,000 to make $8,000. That's a pretty good trade. So this is basically how you can catch trades with precise confirmations and patience in the forex market. I hope you enjoyed this video. And I'm going to be dropping more videos like this, more content like this on this channel. So do ensure to like, share, and subscribe. I'll see you on the inside.